The pitfalls of private equity in the current market. An overview of Trump's executive order on 401k investments. The underperformance of private equity firms. The structural challenges facing private equity. The debate over fees and returns. The social and economic impacts of private equity. Section 1. Trump's executive order on 401k investments. President Trump's recent executive order allows private equity firms to gain access to America's 401k system, advocating for democratization of investment choices for smaller investors. This move aims to enable individual savers to participate in the same investment opportunities as institutional investors like pension funds. However, this shift raises concerns about the implications of involving non-traditional assets, such as private equity and cryptocurrencies, in retirement savings, especially considering the associated risks. Section 2. The underperformance of private equity firms. Despite the potential access granted to private equity firms through this executive order, many publicly listed private equity firms have seen their shares underperform the broader stock market significantly. For instance, firms such as Apollo and KKR have suffered substantial declines, raising questions about the overall health and credibility of the private equity sector. This underperformance suggests deeper systemic issues within the industry, including challenges in generating returns on past investments and difficulties in selling assets at favorable prices. Section 3. Structural challenges facing private equity. Private equity funds are sitting on trillions of dollars in assets, but face declining returns and unsold investments. The typical model relies heavily on leverage, with a significant portion of acquisitions financed through debt. As interest rates rise, the cost of financing increases, threatening the viability of many leveraged buyouts. Moreover, ongoing issues in the economy, such as inflation and uncertain market conditions, have further complicated the private equity landscape, making it challenging for firms to navigate new investments effectively. Section 4. The debate over fees and returns. The high fees associated with private equity investments are under scrutiny, as many investors question the value derived from these costs. Comparatively, while public markets have become more transparent and accessible, the complexity and opacity of private equity can obscure true investment performance. Recent analyses reveal that private equity funds may struggle to deliver the kind of returns promised, and that their financial structures can inherently disadvantage investors. The appeal of steady returns may be diminished by the reality of increased costs and uncertain exit strategies. Section 5. Social and economic impacts of private equity. The impact of private equity on society raises important ethical considerations. As funds focus on profitability, concerns arise over the quality and integrity of service in sectors like healthcare and education, where ownership is often distant and incentives misaligned. The pursuit of financial returns may come at the expense of operational effectiveness, leading to outcomes that harm consumers and workers. The consolidation and monopolization of markets by private equity firms can also stifle competition and innovation in various industries. Conclusion: navigating the private equity landscape. As the landscape of private equity evolves alongside initiatives like Trump's executive order, it is essential for investors to remain informed and vigilant. Understanding the potential risks and rewards of incorporating private equity into retirement accounts necessitates careful consideration and scrutiny. By recognizing the ongoing challenges in the private equity sector and acknowledging the complexity of investment structures, investors can make more informed choices that align with their financial goals and values. If you found this discussion valuable, please share your thoughts in the comments and consider subscribing for more insights into financial markets and investment strategies. Thank you for watching.